Half an hour away from the opens in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm Yvonne with David Ingles.
Good morning. Let's get to your top stories today. Stocks across the Asia-Pacific slipping as robust U.S. economic data blurs the picture as far as Fed rate cuts go. And the Wall Street futures are being pushed down by disappointing outlooks, plural, from Meta and also Microsoft. Samsung just out with earnings to posting a big miss on chip profit. Now, October PMI coming out of China today in the next hour or so, but seasonal factors may actually obscure any sign of an early boost from Beijing's stimulus plans. And we're also awaiting a BOJ decision for any signals on when the next rate hike could come, amid, of course, the ongoing uncertainty around politics and renewed weakness in the Japanese currency.
All right, a quick look at the market action here this morning on Thursday, and it is seeing a little bit of a risk-off session here in Asia-Pacific. That U.S. bond rout did extend overnight after those stronger GDP numbers that we got out of the U.S. So still robust data coming through from the U.S. is suggesting maybe that Fed repricing can continue for another day. Treasuries are steady now in the Asia session. We're just below that 4.3% mark for U.S. 10-year yields. Also watching very closely this Taiwan typhoon, super typhoon, I should say, Kong Ray, that has suspended trading there. So Taiwan is shut here today. You also have Singapore, Malaysia, Sri Lanka markets also shut for holiday as well. So they might not get that sort of follow through that we're seeing when it comes to, NASDAQ futures, U.S. futures right now, which are in a bit of negative territory. Take a look at what Microsoft, what Meta, those earnings after hours did certainly lead to some downside there. So one to watch is really the AI trade this morning after those reports that came out. Nikkei is down just slightly by about 0.5% ahead of that BOJ decision. It might not be about this meeting, but really about the outlook, and in particular, the title of that statement is something that we need to talk about.
They give it away.
Right? They give it away. If they actually change it, it means some change is happening. But given the political uncertainty, they're unlikely to do anything at this meeting as well. Dollar yen not doing a whole lot as well. We're trading around 153 level. Samsung also came out with earnings as well, where we actually did see third quarter profit beat estimates, though. The stock is slightly lower. And obviously, we've been talking about this rivalry with SK hynix as well, and they just haven't been able to get that certification on those chips with NVIDIA. That certainly still seems to be that setback. But the core business seems to be at least offsetting a little bit of that AI disappointment so far. But still, stock is slightly lower this morning. And we're watching, of course, China. PMI numbers are due, as Dave mentioned. There could be some seasonality in this, but you're starting to see signs, Dave, the data is turning a little bit more positive after what we've heard from policy members there in the last few weeks or so.
Yeah, and it's really in the subcomponents that we'll be tracking very, very closely. I'll also take this opportunity to plug, of course, this fantastic piece out of our analysts at Bloomberg Intelligence that they've had a look at month-to-month data on the property sector, and really where we're starting to see the biggest pickup there. So, for example, the Tier 1 cities are actually seeing quite a substantial pickup month-on-month on home price transactions. I guess more on that in a moment. But as Yvonne is pointing out, right, PMI is coming out. You have GDP numbers due as well out of Hong Kong. I think 3.1% is your consensus there. So we are actually, and speaking of China and politics, we are within this 1 week window for within the elections, of course. So you're getting 1 week vol on the yuan, for example. We're effectively at the highest in about, this year so far. We have for the fans of technical indicators, there's an imminent golden cross on a Shanghai composite. We're within 1 point of the 50-day moving average to cross above the 20-day moving average. And oil, let's show oil, please. What's oil? There we go. We're up 1% on the back of that pop we had, of course, in Brent and West Texas. And we're almost over the hump as far as earnings go. It's the last day, I believe, on earnings season onshore. Yeah. We have maybe 2 or 3 weeks left until we get, of course, the rest of the big tech earnings coming through. Li Auto is on deck.
Yeah, I think that the oil price move is interesting, right? With that Rystad report that OPEC Plus may not bring back oil production this year. There's certainly been a lot of debate about that amongst speculators, but certainly that's one to watch when it comes to the energy space. On the PMI front, let's bring in our China correspondent, Min Min Lo. She's here with a preview of what to expect out of these PMI numbers out in just a few minutes. What are we expecting?
Yeah, so this is really the first leading indicator after those stimulus have been announced in September, right? And we're still expecting overall picture to look quite weak. So manufacturing PMI expected to still be in contraction for the 6th straight month, 49.9. That's a slight pickup from the previous month. If you look at the high frequency activity data, if you look at oil refinery, the crude steel output, that has picked up slightly. But because of the fewer working days in October, because of the public holiday, that is going to weigh on the PMI number. But when it comes to non-manufacturing PMI, that is expected to expand to 50.3, and this is boosted again by that Golden Week holiday, the travel expenditure, and as you said, David, the home sales, especially in the first half of the month, had really picked up. Online sales of home appliances as well, so that's going to give a boost to that services PMI as well.
Yeah, there we go. Min Lo giving us a preview of the PMI numbers due out in about 24 minutes from now. So apart from that, there's the BOJ, and of course, we're also in the thick of earnings season in the U.S., where you had the likes of Microsoft the last few hours or so. Meta also very much on deck here. We're looking at U.S. futures right now on your screen shortly. And there might be an aberration because of the pull we're getting, of course, from the after-hours session in the U.S. There we go, 0.3%. On S&P futures, we're flat on Dow, and NASDAQ futures are lower of 0.5%. What's the earnings season been like so far in the U.S., and how does this sort of measure up to other markets in the world? Let's bring in our first guest on the show, Wylie, Tollette, CIO, Franklin Templeton Investment Solutions, joining us here on set. It's nice to see you, Wylie, and thanks for coming in and dropping by, giving us your time while you breeze through the region.
Indeed. Thank you, David.
So I understand you guys just went very recently overweight U.S. equities.
That's right. Overweight U.S. equities, overweight equities overall versus fixed income in our policy portfolio, as well as overweight emerging markets generally.
Okay. Talk us through the change there in the equity market. That's right, because we're in earnings season, of course, there.
Yeah, absolutely. So heading into the summer, we started to grow cautious. We have a big election coming up in the U.S., obviously.
Yeah, I heard about that.
And that always generates uncertainty. Markets don't like uncertainty. And in addition, we had some early indications that growth was slowing. And we follow current leading indicators pretty closely as a signal for shorter-term dynamic asset allocation decisions, and those had started to slow. However, later in the summer and through September, we saw a rapid acceleration of those leading indicators. Growth, particularly in the U.S. and in several key emerging markets, really started to accelerate, and that really drove our decision to go overweight stocks last week. Just slightly. We're not dramatically overweight, 2.5% in a policy portfolio, where stocks make up about 50% of that. So it's not a big bet. That's generally our approach, particularly, as I said, given the election uncertainty coming up, but generally positive.
I was going to ask you about the general uncertainty around this U.S. election, and how do you position around this right now? Do you think animal spirits could return in the wake of this election, or do you think it's an excuse to at least see a bit of correction in this very frothy market already?
Yes, that's been an ongoing debate, obviously, and but generally, again, we try to look through the election. I think politicians say a lot of things, but what actually gets done is generally significantly smaller than what they talk about. That will be particularly true if we see a divided government in the U.S., which actually we kind of anticipate that we'll see a divided government of some sort. That's actually positive for financial markets. We think that will reduce the level of sort of uncertainty in the eventual legislative outcomes. And that's a positive for growth, and it's positive for markets. So that really, again, allowed the underlying economic statistics to drive our decisions.
I guess let's put those two things together. Do we know enough about what the economy probably looks like next year to, I guess, to some extent look through the U.S. elections? And what does that tell you about current valuations too in this market?
We don't know that much about next year's economy. Growth right now is strong, and we tend to make our dynamic asset allocation decisions over sort of a 3 to 6 month horizon. So that's the time frame we're looking at, and we're pretty positive through the end of the year. I think there's a possibility we could see slowing growth into 2025. It's pretty robust right now. There's not much indication that that's the case. But I would say one of the key, there's probably two key risks that we're looking at. First of all, as you highlighted, we do have elevated equity valuations in the U.S., particularly around sort of our Magnificent Seven. We're hopeful that that broadens out through the rest of the S&P and the rest of the market through the end of the year. Earnings have been solid. We've had surprises, up 6% this quarter versus last, so pretty positive. But we have a large debt overhang, in the U.S. with the government, and no politicians are talking about fiscal austerity or trying to sort of rein that in. But once they're in the chair, they're going to have to deal with that. Or bond markets will force them to deal with that. And it's always better if government can get ahead of it. We're skeptical that that happens. We expect, at some point the bond market's going to force the Treasury to sort of come to terms with deficits.
Yeah, we're starting to see the bond market already reacting to it.
I think so.
Do you think yields can push more higher here?
It's possible.
And does that look attractive to you?
It's possible. I think yields are actually reasonably fair at 4.3 right now for the 10-year. Credit spreads are incredibly tight, so there's really sort of no broader sort of indications of weakness in the overall bond market. But again, we'll have to see what the politicians do once they're actually in the seat.
Yeah, and to your point, right? We're extremely tight on spreads. This headline, in fact, just crossed the terminal. Here in the Asia Pacific, we haven't been this tight on IG spreads ever. Quite literally. And I wonder what the role of fixed income you think should be in portfolios right now, with credit being this tight, and you mentioned rates in government bonds. If it's not treasuries, where do you look for that? Is it a hedge? What role does that play at this point?
Yeah, overall, fixed income is certainly a more attractive diversifier than it was, say, 4 or 5 years ago when yields were so low that it was essentially an insurance policy, but really no effective return or income from that. Now with yields at 4.3, you're getting basically decent carry to hold bonds. We do think, and that's part of the reason I'm in Asia talking to some of our clients, we do think there's wisdom in adding some additional diversifiers to a mixed asset portfolio. We saw in 2022, bonds don't always diversify stocks. So it's wise to have some other strategies in the portfolio, uncorrelated strategies in relatively small proportion. But we believe that's a smart move right now. We don't exactly know when yields will, where the direction of yields, no one really does. And again, with elevated debt levels, it's possible that yields could climb further. We don't think it's extreme, but we think it's certainly possible, and it's something for us to prepare for.
Are you getting a lot of questions about opportunities here? I'm just wondering, given just the valuations in China looking pretty cheap right now, even after this rally compared to the U.S., how much exposure do you have in this part of the world now?
Yeah, it's a good question, Yvonne. We are getting questions about it, and I just came from Beijing and Seoul and on this exact trip. That was one of the questions that was actually resonating in my mind as well. I'll say that it's very challenging to sort of get too excited about Chinese equities at this point, given that they're so dependent on government action. We much prefer to look at actual corporate fundamentals, economic fundamentals, momentum in the market as one of our sort of decision-making, kind of a mosaic of decision-making tools. And government policy it's so difficult to predict, and so we're hesitant to go long China. We're also hesitant to go short because it's possible that market could continue to run. But having been in Beijing just a few days ago, I will say that it does feel slow. It felt to me like there's probably additional stimulus needed to really kickstart that economy back into motion.
Wylie, it's great to have you here in Hong Kong. Wylie Tollette there, CIO of Franklin Templeton Investment Solutions.
Thank you very much.
All right, coming up next, we'll talk about Samsung profit at the mainstay chip operations missing market expectations as it struggles to catch up in lucrative AI chips. We'll dig into those numbers just ahead. And leaving you with live pictures from Taidong, Taiwan. Now you take a look at offices, schools, stock trading are all shut due to that super typhoon Kong Ray. You can certainly see those waves this morning. This is Bloomberg.
Tuesday, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended Balance of Power leading into full team coverage at 7 live from the Battleground States and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
Okay, welcome back. So we're looking at the fallout. It's probably a good description at this point in time. Some earnings, of course, the last few hours or so. As you can see, Microsoft, bottom of your screens in the after-hour session. That is effectively, well, quite literally pulling down some of the futures contracts trading in the Asia-Pacific. Although we are coming off lows of the day on the Nasdaq 100, as you can see, 0.4%. Of course, also looking at Samsung, which also sort of unpacked the top-line numbers also about a few hours back here. So you do have results from those two, Meta, Microsoft, and also here, Samsung Electronics. Let's put all things together and bring in our team to talk us through this. Our tech reporter, Annabelle, is here with us on set. Also joining us is Newly Purnell. Newly, of course, Microsoft shares dropping. Let's start with you. Dropping in late trading. What's the disappointment about?
Yeah, I think this really seems to be all about the projected growth in what they expect in the Azure cloud computing division. Yep. So they said they were expected to grow 31 to 32%, which is a healthy number, but that's down from 34 or 35% in recent quarters. So revenue was up 16% in the quarter compared to a year earlier, which is good. But I think investors may be looking at whether this projected slowdown in growth for the cloud computing division might be an issue going forward.
And with Meta, I mean, we heard a lot about AI and the benefits that they're reaping from it in some ways, but I think it's also adding pressure to its core ad business too.
Right. One thing that jumped out is $4.4 billion. That's what they said they would expect to lose in this quarter that they lost in the current quarter in their Reality Labs division, which is what works on AI, hardware, everything that's not their core advertising business. And so they also said, the company said that they expect those losses to widen meaningfully. So investors will wonder, well, how much does that mean, and how many billions will they continue to spend on this new technology, which is unproven?
Did Mark Zuckerberg say anything about that?
Yeah, he said that they're seeing a positive impact across a lot of their works. You might see that they're working on these large language models, on various AI-related hardware issues. But it's a balancing act, right? They're known, what's made them a titan is their advertising business across Facebook, Instagram. Now they're forging into this new realm that Zuckerberg says is going to change the world, but they're battling OpenAI, Microsoft, big names, Google. So they have to continue to invest in this new technology, but investors are wondering, well, is it going to affect their core advertising? There's some tools they're working on that maybe are helping advertisers in that regard, but he's spending billions. How will it affect the core advertising business is what investors are wondering there.
All right. And Belle, we're talking about Samsung. I mean, profit disappointed. What stood out to you?
Well, yeah, it was actually a headline beat, but when you drilled down, it was really that operating profit for the chips division in particular that caused a lot of concern here, because the numbers that came in, it was nearly half of what estimates had been expecting, or analysts had been expecting with their estimates, but coming in at 3.86 trillion won. So that's about $2.8 billion versus what the guidance was for around 6.7 trillion won. So it was a huge drop. It's really interesting to put it in the bigger context, because I think what's really come clear in this latest earnings season from a lot of different chip-linked businesses is that two-speed recovery in the chip space is persisting. Because Samsung says actually it was seeing significant revenue growth in products like HBM, and that's been really the key watch point between that race, SK Hynix versus Samsung. Micron's entering it as well. Who's going to win HBM in particular? It's critical to AI infrastructure. But Samsung said, yeah, we made some catch-up here in this area, but other parts of the business, chips that are linked to automotives, consumer electronics, that's weaker. And you saw that again today. Renesas in Japan had their numbers coming out and really guided to weaker demand for those products as well, and you are seeing that reaction today. So yeah, really key watch point there. The chip operating profit really underwhelming investor expectations.
The earnings call, I believe, is ongoing right now, and I'm looking at the list of speakers here. So everyone from investor relations, memory, foundry, Samsung Display. So you're getting really a nice cross section here. What are you listening out for?
Yeah, well, again, it comes down to HBM in particular, because we want to know, are they going to get greenlit by NVIDIA to supply products into them? They haven't got that yet. It's really of what would be a critical impetus for the stock price to try and recover from here. So that's one of the key areas. Secondly, if they're not going to be able to compete really in HBM, how are they going to fare in legacy chips in particular? Because this is becoming a real watch point. It used to be a sort of like you would sort of shrug off the risk that China could catch up in this space, but now it's actually perhaps even starting to become a reality. They could start to chip away market share from Samsung. So if it's not able to compete with HBM, it's left with the legacy chips. It's facing rising competition. How's it going to fare in that area? Foundry, of course, a key talking point. They've really wanted to be able to compete with TSMC in this space. But again, they haven't really been able to gain there. And when you look at CapEx plans in particular, they're not spending big either. So how is that going to really play out?
Yeah, and the stock has certainly reflected that, right? I think we're 30% off the peaks that we saw from July. Belle, thank you with a breakdown of Samsung. Also, Newly Purnell joining us there on the U.S. tech earnings front. You can also turn to your Bloomberg for more on this. T-Live Go, get plenty of commentary analysis from our Bloomberg expert editors, of course, as that Samsung earnings call is underway.
Yep, plenty more ahead. So we're about just under 8 minutes away, going in 7 minutes away from the opening bell, and we're wrapping up earnings season as well here in Greater China. A couple of more weeks left, though, when you look at Hong Kong. Onshore, though, we're pretty much closing the book on that. Plenty more ahead. This is Bloomberg.
All right, as we mentioned, right, we're at the tail end of the last day of the earnings season onshore in China. If you take a look at how things have fared so far, in the most part, you're seeing a majority, about 2/3 of the companies did surprise to the downside. So this earnings season, not quite as upbeat, and positive surprises maybe it was a third. But here's how we see it break down by sector by sector.
Yeah, only 2 sectors so far have managed to beat the bar as far as this is concerned. Now, obviously, we knew earnings were going to get weak. We were looking for forward guidance and whether an analyst would then start to ratchet up their projections for next year. We can talk about more of this, of course, when we get market reaction. Now, just a quick wrap, of course, we've had a ton of earnings.
Yeah, you got to go through all of them. In some ways, we're going to try. Yeah. Third quarter earning highlights. BYD certainly was a standout, right? Revenue soaring 24% to $28 billion and beating Tesla for the first time since they went head-to-head in global EV sales. And the biggest state-owned banks reported higher profits, and that's despite a slowing economy and deteriorating margins, with ICBC gaining almost 4%.
Yeah, meanwhile, though, you also have a good representation from the property sector. China Vanco posting, get this, a net loss, 8 billion renminbi, around $1 billion, of course, given the exchange rate right now, bringing its combined losses for the first 9 months of the year, get this, almost 18 billion. Also in the steel sector here, related sector, Baoshan Iron and Steel, net income down 65%. Results do stand out, of course, in a sector plagued by losses, with the company saying that they rank first in the industry, right? Earnings stories, that pre-market looking like this. The open is next. This is Bloomberg.
Welcome back. You're watching the China Show. We're counting on the opens of markets here, and we've been talking about pre-market is looking okay when it comes to Hong Kong, but yeah, we are wrapping up that earnings season onshore in Shanghai today. So certainly we're going to see a lot of these sort of idiosyncratic sort of moves across some of these stock moves this morning. We've already seen that when it comes to the proper stays like China Wanke, BYD, for example, with a standout quarter and beating out Tesla when it comes to revenue in the third quarter as well. Dollar China, we're not doing a whole lot here, but we talk about implied vol, and that continues to be quite elevated, Dave.
Yeah, it actually spiked substantially in the last, I would say 24 hours or so as we came into that window, that 1 week window ahead of U.S. elections. So we'll talk more about what that means really for not just the currency, right, but also what it means for the economy and how much of future growth do we have to shave off if tariffs do pick up for 2025 and 2026. We should also be getting the PMI numbers coming through any moment now. While you're looking at that as well. Okay, here we go.
Oh.
And wow, what a positive surprise. The number for October, and keep in mind, this is the first full month from that policy pivot.
Yes.
50.1 coming in above expectations, above that 50 line. We'll unpack this a bit further as you look at that. Very quickly across the Hong Kong Open, 0.5% to the upside. 90% of earnings through, nearly there on MSCI China. Speaking of data, GDP numbers are coming out of Hong Kong later today, 3.1%. I guess before we talk about anyway, since we're up. The big banks are up, so we're looking at single-digit gains on profits for all of these banks, the big four coming out as well. And some of the other stories coming through, you have China Life posting it's really been in the insurance space that have been the initial and early beneficiaries here of this market rally. 174% jump in the 9-month profit for China Life. Jinko Solar was out with earnings, a standout, of course, in the U.S. session overnight. And we talk about this loss of about $18 billion now for China Vanco for the, 9 months as well. And Agricole also coming up with earnings 3.7%. But yeah, more on this.
Yeah, I mean, this is surprising to the upside, right? You take a look at manufacturing PMI, 50.1. The expectation was something that was slightly below that, at 49.9. And this is one of the biggest sort of moves we've seen, reversing 5 months of contraction on the manufacturing floor. And non-manufacturing, that was a slight miss, but it's still 50.2. So seeing an improvement from the previous month. The fact is, because we were thinking it was the October National Day holiday, we had a whole week off, that things were going to look a little bit less robust.
Yeah.
But it seems like, are we starting to see signs of stimulus really playing through in the economy? That's the key question.
Well, clearly on the headline.
Yeah.
I'm waiting to see what the components look like, right? So what's really made up this beat. I think we'll get more on the data in a couple of minutes or so. In terms of market reaction, as you can see on your screens, that's dollar China. So holding on to the slight weakness post these numbers. Let's get reaction now.
Yeah, Xiaojia, Chief China Economist at Credit Agricole. Do you think we're starting to see signs of stimulus really playing through?
Yes, I think so. I think this PMI confirmed our expectation. I think is encouraging. If we look at especially normally October PMI, indeed would show some softening compared to previous months. If we look at the average readings in the past years, that said, we are seeing high frequency indicators coming through. So far in October, seems to show some marginal improvement at the list. Compared to September. For example, on the consumption side, auto sales, home appliances sales seems to be show quite decent double-digit growth so far in October. And also some of the other things could also be coming through. For example, maybe we are seeing more of the growth improvement in terms of manufacturing IP because of on the back of fiscal support on the upgrade of those equipment. That is quite probable. I do think the policy easing come in a more collaborative way since late September are showing some modest boost to the real economy.
What about high frequency data on around property, for example?
Oh, yeah.
Have you seen anything that's picked up there?
I think for the major cities that we are tracking, the new home sales so far in October are showing like a smaller year-on-year decline compared to September. But in the secondary market, and especially in those top-tier cities, we are definitely seeing more of the encouraging sign. But I would say that we probably still see some of the diversifications in terms of how the property is doing nationwide.
So that's a sustainability question, right? If we have a U.S. election looming as well, how long do you think the sort of boost in activity can last?
I think overall we still have to see a little bit more policy easing to make household a little bit more comfortable in terms of consuming, and for the private corporates to really be convinced to put more of the investment on the table. So the upcoming MPC Standing Committee that is going to conclude on 8th of November will likely to provide more clue.
Such as what? Like what would be a good list of more detailed measures to come from next week's meeting? Is it next week? Yeah, it's next week.
Yeah. Concluding next Friday, I think. Yeah. I think to start with, definitely we are going to see more of the net issuance from the government bond issuance side for this year. Previously, Ministry of Finance already pledged to meet this year's budgeted fiscal expenditure. So if that is the case, then we would expect that increase of 0.4 to 1 trillion in RMB terms, as well as the utilization of various fiscal funds to help to achieve this target. But beyond that, I think there has been also some of the policy rhetoric in terms of introducing trillions of packages in order to support the local government debt swap, for example, and also for bank recapitalization. So we think the upcoming MPC will likely to provide some guidance on that amount. So our estimation is about 6 trillion for local government debt swap in the next perhaps 3 years, and also the RMB 1 trillion for the bank recapitalization. So I think going forward, I think this MPC meeting come as a very interesting time, a little bit later than the usual timing for China, but just coincide with the U.S. elections. I think policymakers are perhaps planning some options in terms of how aggressive they should be responding.
Yeah, I was going to ask how big of a swing factor could this U.S. election be? Does it just, in some ways, if Trump wins, for example, does this steer policymakers to focus away from maybe alleviating debt risks in local governments, building infrastructure, domestic issues, to more external ones? And focus on more like productive forces and building high-end manufacturing.
Yeah, so I do think those the outcome of the elections in terms of how the way they are going to treat China down the road could be slightly different. So in terms of Trump, I definitely see more of a negative growth shock in the next 3 years because Trump is quite known as a tariff man, and he has repeatedly pledged to levy 60% tariffs on China. So I think that is a real threat. We don't know whether this 60% could be realized in full. It would not be surprising at all if he hiked quite aggressively the tariffs on Chinese goods. So to offset such negative growth shock and also the potential hit to China's financial markets through FX, through equities, the Chinese policymakers will have to rely a little bit more to stimulate the domestic demand. So beyond the fiscal packages we just talked about, we will definitely would expect a little bit more in terms of how Chinese government would be willing to stimulate more directly on the consumption side, on the private investment demand side. For example, like higher fiscal subsidies to support the income of the low-income household, and also to expand the consumption stimulus program. I think those are very likely policy response, and of course, and also to provide more of the central government and the PBOC's funding to help the local government to solve this problem issue.
Yeah, I'm just going to read out some of your estimates here of how much it might hit growth if we get 60% tariffs at 0.4 percentage points for 2025. And as much as 1 percentage point for 2026. Is that all going to be in the form of a reduction to the contribution from exports, or is there something else that you're modeling here?
I think a part of that will come directly from exports, as we have seen in the past episode during 2018 and 2019. But I think beyond that will be also some of the indirect impact through multiple channels, like the hit on the investment demand, and also through the FDI channels, and also the potential contractions to the financial conditions, like how the equity market, the negative reaction and etc. So So for that, I think you could be 0.4 percentage point in 2025, but the negative impact will be more visible in 2026 because during the year of 2025, in anticipation of higher tariffs on Chinese goods, there could be some of the front loading of the imports from China, as we have seen in the past episode during the Trump 1.0 scenario. So that would help to partially offset that. And we have not taken into account the policy response by China for that estimate.
Well, lots of moving parts. Thank you for taking the time to come in today. Xiaojia, their chief China economist at Credit Agricole. We now have more details on this PMI number, which beat almost every single one. I think you do have the highest end of the forecast was at 50.2, so there are a couple of more forecasts where this came in above. But yeah, some of the subcomponents are coming through as well and beating on all five, at least the major subcomponents. Not beating, an increase from the previous month.
Yeah, so certainly this is a positive sign that at least what we've heard so far is leading to some sort of impact on the real economy. It's not just something that is, leading to that market rally, and certainly that was the big concern for many market participants out there. So there you go, some early signs at least that things are turning around, and yes, reversing that 5 months of contraction on those headline numbers. That certainly is a key milestone there. CSI 300 is doing this, though. We're still seeing some downside at 0.6%. Dollar China, we saw it holding on to that weakness, but maybe coming off a little bit, but just it's been quite marginal. But you are seeing the Hang Seng doing a little bit better, but we're just seeing upside about 0.1% for the Hang Seng as well as HS Tech this morning. Coming up, BYD notches a fresh win over Tesla, out in front on quarterly revenue for the first time. We have details of their results coming up. This is Bloomberg.
All right, welcome back. You're watching the China Show. Going on 14 minutes into the cash market session here. BYD reporting yesterday. As you can see, we're pulling back a little bit, not just across the stock itself, but broadly across the car sector here. 2.5% across SAIC and Geely. NIO, which, by the way, did very well in the session yesterday, we're pulling back about 3% there.
Yeah, and that's despite what we heard, right? That milestone that was reached with BYD in terms of their revenue for the quarter that beat Tesla for the first time since the pair went head-to-head in global sales. Our EV supply chain and transport reporter, Daniel Lee, joins us. We were just talking about this yesterday. It's come to reality now. How big of a beat is this, and how significant is it really?
It's a strong beat, and it gives the foundations for the fourth quarter, which should be an even bigger beat, particularly extending that gain on revenue versus Tesla. But when you look at how revenue employee matches up, still BYD is earns 6 times fewer per employee than Tesla. So you can still see the gulf on some metrics that Tesla is better and bigger. But you just think if Tesla had a cheaper vehicle and hybrids, look at what it could potentially be. Look at where BYD is now. So still, for the both of them, they still cause a lot of fright to the legacy automakers out there.
Yeah, well, are they on track to hit the 2024 target after these numbers?
Yes, and we've got the next set of monthly numbers for BYD in terms of deliveries coming up in the next couple of days, actually even tomorrow. So we should get a clearer indication of how well this October performance has been, particularly not just for BYD, but for the broader industry, because we've seen a lot of car makers, particularly in China, doing very well out of subsidies and other measures just to try and stimulate sales.
We have Li Auto coming up as well. I mean, this is one of the more, I guess you could say, successful upstarts that finally has kind of turned a quarter and turned a profit as well. How are we expecting this quarter to turn out?
So it was a record quarter in terms of quarterly deliveries, 150,000 units, and the best ever. And when you look at how they've been projecting in terms of revenue, we're looking at about 41 billion yuan in terms of revenue. So that kind of baseline in terms of record sales really should help them gain momentum, because they had a bit of a faltering time over the summer in terms of launching one of its new models. So this will help them extend its lead as one of the more successful upstarts, and feeds into just this narrative of just how well not just BYD but those in its path are doing well, just to see how they can erode the likes of the German automakers who are really under pressure, particularly in China.
Danny, thank you. Danny Lee, our EV supply chain and transport reporter. And yeah, we're seeking your feedback as well. So Bloomberg TV would like to hear from all of you. We put together a short online survey, and access to the survey bottom of your screens. There we go. QR code. Do tell us what we're doing well, what we're not doing well. Of course, we'll probably ignore. I'm kidding. We won't. We'll take that very much seriously and in stride. We welcome feedback from all of you. And there we go.
There's Danny Lee testing it out.
Danny Lee's pretending to scan the QR code. He's done it already. Okay, plenty more ahead. This is Bloomberg.
Well, the Hong Kong Stock Exchange is opening an office in Riyadh and exploring cross-listing ETFs with the Saudi exchange. CEO Bonnie Chan told us exclusively that they're hopeful about a more fruitful collaboration with the Saudi markets.
And we're very excited. So this morning we announced that we are going to open an office here in Riyadh. I think this is another step in furtherance of our overall strategy in the Middle Eastern region. And we have been having dialogues with our friends here for quite some time now. Of course, it started a couple of years ago. We have signed an MOU with the Tata World Group. We've also recognized a few exchanges in the region, including Tata World, Abu Dhabi, as well as Dubai financial markets, so that it will be easier for companies in this region to potentially explore a secondary listing in Hong Kong. But I will say that the kind of cooperation we have and the level of interest we've seen is just amazing.
Speaking of listings, I know there were 2 listings that are going on this week as well. ETFs are being launched on the Tadawul Index, tracking the Hong Kong Stock Exchange.
Correct.
Last year, the reverse happened.
Yes.
Let me just ask you about these new listings and how much you expect that it's going to mobilize capital into Hong Kong stock markets.
I think these listings are very important. First of all, mobilizing the capital, but more importantly, I think they're important in terms of building the awareness and familiarity, because at the end of the day, we're at the beginning of this journey, right?
Yeah.
So we need investors on both sides to gain more knowledge and familiarity with investment opportunities in the opposite direction. And therefore, last year in November, when we listed the first Saudi ETF on the Hong Kong Stock Exchange, that marks the beginning. And there were over 50 Saudi companies underlying that ETF, which were listed on the exchange. And this week, it's the reciprocation.
Exactly.
We have those 2 ETFs with Saudi underlying, with Hong Kong underlying, listed here on Tata World. And I think that's another step, towards hopefully, a very fruitful collaboration.
Quick question about also just the general activity that you're seeing on the exchange right now, because it feels as though there has been a small pickup in IPOs recently. I know the past month, September, has been a busy month in terms of volumes. Is that momentum going to continue?
Oh, yes, absolutely. We are very happy with the return of mega IPO, shall we say. We all know that the last 2 years have not been particularly conducive to the IPO activities, and it is a global phenomenon. Mm-hmm. But in Hong Kong, we first of all did a very big IPO in September for Midea, and it's a $4.6 billion IPO, which is the biggest on our exchange since February 2021, and the second largest in the world this year. And following that, we have already seen another couple of pretty big deals. And the important thing is the participation has been quite phenomenal.
And that was Bonnie Chan, the CEO of HKEX, speaking with our colleague, of course, in Riyadh there, Jumana Bersetchi. Right, just some top corporate stories we're tracking too. At this point, the shares of AstraZeneca slipped, and as you can see in London, quite a bit, though. There we go, bottom of 53% here after it said its China president, Leon Wang, was under investigation by Chinese authorities. Now, the drug maker says Wang was cooperating, and if requested, the company will also work with the investigation. Now, earlier this year, Chinese police detained several current and former employees for questioning over potential illegal activities. Now, Bloomberg has learned that the European Union is preparing to launch an investigation into Chinese e-commerce platform Temu. That's over concerns it's, well, failing to curb the sale of illegal products online. EU regulators have carried out similar inquiries into the likes of Meta, AliExpress, TikTok, and X. Now, U.S.-listed shares of Temu's owner, PDD, fell on that news. Now, Trafigura is preparing to take, $1.1 billion hits after discovering what it suspects was fraud involving some of its employees. Now, the company says staff in its Mongolian oil business manipulated data and documents and deliberately concealed some overdue debts. Now, the announcement confirms early reports by Bloomberg and may force the company to restate prior earnings.
All right, another check of markets here right now. We're taking a look at, of course, what's been going on when it comes to the earnings side of things. Prada certainly is one standout here this morning. If you take a look at how those earnings did, third quarter sales beat estimates. The shares are jumping the most in about a month or so. So we're up about 6%. AIA, new business value, also rising some 17% as well. China Wanko talking about that loss that they really had to make, their net loss of close to 18 billion renminbi. That certainly is leading that to weigh in the stock here this morning. And Costco shipping as well. Strong third quarter profit. The shares are up about 1%. The banks certainly, despite what we've been seeing, right, all the concerns about NIMs being narrowed, this is slowing economy, they were still able to eke out at least single digits in terms of profit growth. So there you go. You're still seeing some upside when it comes to some of these financials here this morning. Yeah, but 1 to 6% as far as the big four are concerned in terms of profit growth. And of course, we don't have still a lot of data as far as where margins go, but I certainly do expect them to at least remain, if not low, even lower, but certainly at very low levels, given, of course, where we are with the economy as well. Right, a quick glance at how do all of those things sort of gather together as far as the index goes. We're down about 0.6% on the CSI 300, Hang Seng, a fifth of 1%. Plenty more ahead. This is Bloomberg. Welcome back to the China Show. Here's a look at the HSI half hour into this session. It's a sunny day out in Hong Kong. It's a bit different where you take a look at how Shanghai is looking. Taiwan dealing with a super typhoon this morning, so markets there are shut. But yeah, we're doing okay. We're up about a third of 1%. Those PMI numbers out of China certainly did surprise to the upside. They're reversing 5 months of contraction and actually starting to see some maybe
green shoots
coming through from stimulus.
Yeah, some of the things have really turned. So and I think we'll show this later, all major indices have actually, subcomponents have actually picked up. Our folks at Bloomberg Intelligence have put out this great report. They've literally looked at nearly every major city in China and showed really how some cities have really started to see home sales start to pick up, particularly among first-tier cities. We'll get more on that in a moment. The markets, though, apart from what's happening in China, is, well, a couple of things, right? So Yvonne alluded to this too. So Taiwan is shut because of the weather. We have holidays as well across some other markets in the Asia Pacific. Japan is entering its last 30 minutes in the morning session. It's a very big day, of course, in Japan today because Shohei Ohtani could win his World Series. Then there's also the BOJ, which I guess we can talk about in just a moment.
What's more important for Japan?
Well, I guess it's secondary, the BOJ.
Poor traders, though. They can't watch the game.
Yeah, this policy constraints.
Compliance.
Yeah. Follow the market, not live updates. We'll do that for you, the latter. 0.3 of 1% on Asia Pacific. S&P futures getting this pull from the drop in the likes of, I think, Microsoft and after hours trade. I mean, this yield melt-up story in the U.S. is quite something, hasn't it? And do you add duration at this point in time? Franklin Templeton, who actually joined us about an hour back, thinks it's about time maybe you start adding to duration. As far as bonds go, they do prefer the European bonds over U.S. Treasuries. But that being said, they do think, of course, they do see some value as far as that is concerned. But yeah, back to the data, which came out earlier.
Yeah, so you mentioned about the sub-indices where you are seeing broad beats across the board there. New orders, you take a look at how that looks here, and we're at 50, so that looks like things are looking a little bit better there. It's interesting, right? We're starting to get some commentary to come through. The market reaction was quite muted. And I think for one thing they saw, yes, it's a marginal upside surprise, but not enough nothing to get excited over, according to ING. They're saying, they were expecting PMI to remain broadly stable. So that small uptick didn't really do much for them. And I think everyone's kind of waiting for the MPC next week to see if there's any signs of more rollouts of stimulus here to follow through on this sort of modest boost in activity. So overall, they still see that they need some more recovery in domestic demand to offset what looks to be a still external weakening demand picture there as well.
Yeah, let's get Mark Cranfield's take on this and what this means for markets out of our MLive team, of course. Mark, let's start with the PMI numbers, and let's juxtapose that too with the Chinese earnings we've gotten so far, and most have been disappointing. I think to the point you're making on the blog today, it's, PMI is welcome news, but we'll need to see more of this.
Yeah, I think nobody would expect the Chinese authorities to relax just because you've had the manufacturing PMI slightly above the 50 line. It's spent too long drifting into contraction territory, and the same for services as well. These are not gangbuster numbers. These don't tell you that the Chinese economy is firing on all cylinders. It just says there's a slight improvement, and maybe some of the earlier stimulus measures are beginning to have a small impact, but obviously an awful lot more needs to be done. You can see the reaction of equity markets over the past couple of weeks. After that huge spike that we saw in September, it's been a much more measured approach this month, with some people already taking their profits that they had and pulling out of the market. At least most of the major indices are well above the bad levels that we did see in early September, but it's not really a fully convincing message to the rest of the world. International investors will certainly be looking at this as being a bit of a half full, half empty glass. They're going to need to see a lot more from the Chinese authorities, which means that the MPC meeting next week still has a lot resting on it. People will still expect to see more clear messaging that they're going to continue, that they've got big plans for next year, and they would probably like to see some very specific numbers on where the money is going to be spent. So it's a good start, but there's a lot more work that needs to be done to convince people that Chinese equities are worth investing in.
And then in the meantime, we're waiting for this BOJ decision. How likely do you think this meeting is going to do much in determining the direction, or are we just waiting for all this big week of, as you say, event risk, U.S. election next week and the like?
Well, David's just put extra pressure on the BOJ. They don't know whether to have an early decision to peaceful or whether to go with their normal timeline. It's a big day for them. I mean, seriously, they are only part of the story, as you say. There's a lot going on in the next week. And some of the things are out of their control. The Bank of Japan can't do anything about the FOMC, the US elections. They can't even do anything about the jobs data. They all have a factor to play, particularly for what happens to the Japanese yen, because the US dollar is already pretty strong, might even get stronger in the next week. That adds a lot of pressure onto what the Bank of Japan have to do. Everything tells you, and you can see the way that traders are behaving, is that people are expecting a bit more weakness for the Japanese currency. That they can't form a government at the moment. There's no clear sign when that's going to happen. That means that the Bank of Japan is very difficult for them to tighten monetary policy while they're not getting clear signals from the Ministry of Finance. And at the same time, the external risks, higher yields in the United States, the threat of changes in American politics, all of those things are supportive for the US dollar and not so good for the yen. So that's being priced in. Some of it is priced in already. There's probably a bit more to go. The wild card in all of this really is Bank of Japan Governor Ueda. He may see himself as the last defender of the Japanese currency. At some point, the Bank of Japan has to do something to stop the weakness in the Japanese yen. They probably realize they're the only ones that can really do it. But whether he decides to do that today is a bit of a stretch. So most likely he won't. He'll put it into the future. But it is a very big day for the Japanese yen, one way or the other.
Mark, thank you. Mark Cranfield, there, Bloomberg MLive strategist, on how to look at this BOJ meeting. For more, let's bring in our Asia Trade co-anchor, Sherry Yan. She's outside the BOJ headquarters. Sherry, no rate change expected today, obviously, just given the political turmoil that the government is going through here right now. But what should we watch out for in this decision?
Yeah. Mark put it so well, right? I mean, we have so many things to consider at this point. Governor Ueda really thinking about potentially what we saw in the elections here in Japan, where the ruling coalition lost its majority for the first time since 2009, and what that really means for policy making and the trajectory of inflation and economic growth here in the country. So as Mark was saying, we're not really expecting a change in the rate at 0.25%. The BOJ expected to stand pat, but more than half of economists surveyed by Bloomberg now expect the first hike to come in December and perhaps another in January. Of course, we also got indication from the BOJ Governor Ueda himself last week when he talked about having time in order to measure policy steps going forward. Of course, we have inflation here in Japan above that 2% inflation target by the BOJ for over 2 years already. A little bit of weakness when it comes to domestic consumption, though. Retail sales this morning disappointing to the downside, growing only about 0.5% year on year. And the question is, does he really have time? Because we are now seeing the Japanese yen continuing to weaken. We're talking about 3-month lows against the US dollar. Will the BOJ need to move very soon rather than later is the key question.
Yeah, Sherry, hold that thought. Let's bring in Taro Kimura out of Bloomberg Economics to take us through, of course, their expectations ahead of this meeting. Taro-san, Sherry just mentioned the Japanese yen there, and I'm wondering how the weakness recently in the currency might influence the inability, perhaps, of the BOJ to strike a dovish tone. Just your take on what to expect today.
Right, absolutely. So Japan's inflation in general getting very sensitive to weaker yen recently, as the BOJ is officially flagging as an inflation overshooting risks. So therefore, my expectation for Ueda is obviously the rate's going to be held. However, he tries to show his concerns on stronger inflation backed by weaker yen and as well as positive wage growth. So therefore, he tried to send a modest hawkish signal in his press conference, although it's really hard for him to send a very fresh signal because of the big political uncertainty under the status quo.
Yeah, how do you see the politics factoring into how the BOJ decides? Do you think that actually could delay normalization?
Right. Usually, I don't expect the Bank of Japan to take care of political situation that much. However, this time, the level of the risk is uncertainty is unprecedented. So therefore, at least in the short run, it will tip the BOJ to hold its rates, because the ruling coalition needs to ask support for probably the Democratic Party for Japan, which campaigned the election with manifestos to support squeezed households and small and medium enterprises. So therefore, it's hard for them to give a nod to BOJ hike soon. However, probably from the next year, if the political situation gets settled, those parties will think that the squeezed households are because of the weaker yen and higher import prices. So therefore, it could happen that eventually those opposition party asks BOJ to hike to fight inflation.
Yeah, Sherry, it's rare that we get to mix politics with economics in Japan, but certainly given the unexpected developments over the weekend, how does this complicate the math for the Bank of Japan here, politics?
I mean, we saw the immediate reaction being weakness in the Japanese yen, right? And will that really hasten the BOJ to have to hike rates again? Remember back in July, that rate hike came when the yen was close to 162, a 38-year low against the US dollar. On the other side of that equation, there's an argument that Taro was just making right now, that you have more cooks in the Japanese political kitchen right now. So will Prime Minister Ishiba have to heed all of these different calls from political parties? Now, Taro talked about the DPP. We have heard from the head of the DPP, Yuichiro Tamaki, even talking about BOJ policy. Just this week, he was talking about how the BOJ shouldn't rapidly change policy at the moment, that they should wait for wage growth to be around 4%. We are going to get the junta wage negotiations in the spring. What level of wage growth can we see at that point is the key question. And as we are talking right now, we are getting Prime Minister Ishiba speaking to that smaller party to try to perhaps incorporate some of their policies, including the tax break for part-time workers, and what that might do to the inflation and economic trajectory of Japan is the question.
All right, Sherry, thank you. Sherry on there, our Asia trade co-anchor. Also want to thank Bloomberg Economics' Taro Kimura. Of course, you can also turn to your Bloomberg for more on this. T-Live Go is up and running. You can put plenty of commentary analysis from our expert editors as we count down to that BOJ decision.
Yep, could happen within the next, say, 40, 45 minutes or so. Right, some breaking news out of Japan. Shares of Denso, which were, well, right before the news broke, we're trading very much range-bound. As you can see, the massive spike in the last few minutes or so, down to this announcement and filing with the Tokyo Stock Exchange. The company will be buying back 400 or up to 450 billion yen of shares. Buybacks pushing up the stock. As you can see, 3.5% as we speak. Going into the lunch break, 18 minutes away from the Tokyo lunch break. Right, just ahead here on the China Show, we're talking politics and how we marry that with technology. Eurasia Group will be joining us to take a look at how a Trump or Harris presidency could shape the outlook for big tech. That's ahead. This is Bloomberg.
Tuesday, election night is here. Trust Bloomberg for up-to-the-minute results as the races for the White House and Congress are decided, as well as detailed analysis of what it all means for the economy, markets, geopolitics, and more. Tune in at 5 p.m. Eastern for an extended balance of power leading into full team coverage at 7, live from the battleground states and Harris and Trump HQ. It's election night on Bloomberg. Context changes everything.
Okay, let's check in on shares of 3 stars. Samsung, of course, 3 stars in Korean. 2% higher did the markets give the company 3 stars for their earnings. Top line beat, but it's really in the chip business and at least some of the breakdown that maybe have been wanting. But as you can see, shares are up about 2% there.
And we're just a few days away, as we say, from the U.S. election, with the results set to carry implications far beyond its national borders. Our tech reporter Annabelle Drewlers has a look at what the outcome could mean for Taiwan, its semiconductor industry, and cross-strait relations.
I will make sure that America, not China, wins the competition for the 21st century.
2 candidates with 2 different approaches toward Beijing.
To me, the most beautiful word in the dictionary is tariff.
Caught in the middle is Taiwan, which relies on the US for security guarantees, but has deep economic and cultural ties to mainland China. There are signs of a cross-strait decoupling, including fewer people self-identifying as Chinese. Yet Donald Trump's criticisms are just one reason Taipei's trust in the US is also at risk.
Skepticism towards Washington has been increasing in the last few years. We need to chart our own way and not completely depend on Washington and not completely economically depend on Beijing is hugely important.
Who's next in the White House matters to key chip companies on the island, facing uncertainty over industry support in the States, while Beijing pushes to level the tech playing field.
The entire ecosystem in semiconductor has to face actually stronger competition from China. At the same time, with the United States, it's not really clear how much of the subsidies will be coming to Taiwanese manufacturers. So net for Taiwan, it's a loss.
Pressure on Taiwanese chip firms to offshore at least some production is unlikely to abate, even if UBS is among those who see essential operations staying put.
The core and the benefit of this ecosystem, R&D, technology development cost is quite competitive here. So I think for Taiwan, they're going to try to keep it controlled, keep a core base here, and diversify what they need to.
Retaining crucial semi-production on the island carries a risk. as worries swirl that tensions between Beijing and Taipei could spiral into military conflict.
A conflict of some sort is very, very likely. If you think about the need to choose between the U.S. and China, I think it's a very difficult one.
Still, Taiwan's government and big business alike say they're ready to work with either new U.S. leader.
I don't worry about whether the Republic or the Democratic parties.
We already experienced many of the presidential elections, and then we mitigate risk and maximize opportunities.
Annabelle Drulers, Bloomberg News.
And joining us now out of Washington is Xiaomeng Lu, Director of Geotechnology at the Eurasia Group. Xiaomeng, thank you for joining us, and good morning from the Asia Pacific. I mean, let's get straight to it. I mean, how do you think this chip conversation changes if it's a Harris White House compared to a Trump White House? What do we get how do we feel this time next week about that conversation?
Yeah, I think Harris, if she is elected as the next U.S. president, she represents mostly continuity on the Biden tech approaches, including on CHIPS Act. She'll keep implementing the CHIPS and Science Act. A lot of companies are still waiting for the disbursement of government subsidies and loans. I think she will carry that mission forward. And there are already chatter in Washington from company about what about the next CHIPS Act. The CHIPS Act too, they want this government support to keep coming. That will be the trajectory. That's largely consistent with what Biden did. But Trump will be a very different ballgame. Trump's campaign slogan, especially on tech, has been deregulation. For him, deregulation is his industrial policy. I think TSMC, especially given its geopolitical sensitivity in this new environment, if Trump is elected, they're going to face some serious headwinds.
It's quite confusing, too, the Trump tech agenda. Maybe you can explain it to us, right? Because obviously he talked about tariffs and his pledge to increase tariffs by 60%. And then again, though, when it comes to TikTok, he's reversed his decision whether to ban it or not in the U.S. So what do you think is his tech agenda going to be?
Yeah, I will say Trump, if he is elected, he will defriend technology allies and deregulate disinformation. Those are probably some of the key features of his policy. Biden has been a big fan of coalition building, and export control has been quite effective, at least in the short term, reaching the desired effect. But I think if Trump is elected, between digital tax, tariff, antitrust, the U.S.-EU tech relationship will fray. And then on digital issues, especially disinformation, Trump is very unhappy with the way that they got deplatformed by social media companies. So he will take a punch back in that area. In terms of TikTok data security, I'm not sure he really seriously cares about the issue itself. On his campaign trail, he showed opposition to the TikTok ban passed by U.S. Congress, signed by President Biden at the time. I think he was largely doing it to score political point and attract young voters' attention. But once he is in White House, he's in power again, he may flip his position again, just like the way he tried to ban TikTok during the first Trump administration.
What about how does potentially a Trump White House, let me just ask you also about how it affects U.S. Hardware or hardware companies specifically that have, say, parts of their supply chain in Greater China. Apple's a good example of that, or finished products. Tesla's another good example of that. How do you think any tariffs affect them, or do they get an exemption or pass? It's similarly the way we saw in the first term under Trump.
To a certain extent, I would say we have seen this movie again. During the first Trump administration, he threatened tariff and he imposed tariff. I think at this point, a lot of the U.S. semiconductor companies have already adjusted their supply chain to offset the commercial impact of those policy actions. I think they are doing simulation about what Trump tariff may look like. And Trump's opening position is probably 60% tariff, 100% tariff, and he may calm down if there's a grand bargain for him to achieve. So he looks good and he looks like a winner. I would say that will be the perspective I want to highlight in this conversation.
Yeah, and where does Taiwan fit into this, right? We just talked about how Taiwan is really becoming the engine that's driving AI. But there's also risks around that. I mean, how should companies really navigate around those tensions when it seems like all the demand, all these exports of data centers, for example, are now even surpassing the likes of China?
Yeah, I think this is an area I got a lot of client tension on. People ask if Trump is elected, particularly, he doesn't care about Taiwan. He doesn't care about sovereignty issues. Will China take a more aggressive move? And that could disrupt global trade big time. What does that mean for semiconductor and car manufacturers and even AI data center operators? But I will say Eurasia Group's assessment for Taiwan prices is that for the next 4 to 5 years, I think the most likely scenario is called limited quarantine, where the conflict is in a very managed situation. It's a very limited crisis in the sense that it will not be a big, severe disruption to global trade.
Xiaomeng, we'll leave it there. Xiaomeng Lu, the Director of Geotechnology at Eurasia Group. We got plenty more ahead. This is Bloomberg. All right, your market check here right now. Samsung Electronics now turning more positive here on the back of what we heard in the earnings call. Their comment about these HBM chips and that they are making service. And there you go. Chips are better, or at least you could say there, but 3% higher for the stock. SK Hynix, though, down some 4%. All right, 11:29 a.m. in Tokyo, and Japanese markets are going to that lunch break. And really, we're just waiting for the BOJ now. Any minute, any second now, they could be making that decision. Set to hold rates, though, just given what the political environment is looking like there as well, with the LDP still looking for coalition partners and the like. The BOJ unlikely probably to do anything this time around. But you take a look at how weak the yen is. You got to wonder how long they can wait, Dave.
And if the weakness in the yen in some ways prevents the BOJ from sounding slightly more dovish than they would want to, given
because what it could do to inflation.
What it could do with inflation, right? And it's become, I think, with the political uncertainty in Japan right now, has inflation become a political problem? I think is the other question altogether. So apart from the BOJ, I think we've spent almost 10 minutes of this hour's show talking about how, in many ways, said how the BOJ is not going to do anything. And we'll probably spend another 5 or 6 more minutes talking about how they won't again. Shares of Denso are in focus in Tokyo. So about, I'd say 20 minutes back, the company filed this with the Tokyo Stock Exchange that they will be buying back shares of as much as 450 billion yen. So shares initially spiked to as high as 4%. We're going into the lunch break right now, just under 3% gains as far as that is concerned. Asia Pacific, we're looking at declines just about across the Asia Pacific right now, 0.25%. S&P futures are also down, and this might also be down to the fact that you had big stocks there like Microsoft, for example, falling in after-hours trade. Most sectors are lower. You have real estate and IT among the very few bright spots here, as we await the Bank of Japan and what they probably won't be doing.
Yeah, in the meantime, let's bring in Ayako Fujita. She is the chief Japan economist at JPMorgan Securities. Ayako, it's great to have you. So we talk about it, right? The external picture is uncertain with this U.S. election that's looming. You have domestic policies that are in a state of flux as well. How do you think that changes the BOJ, their thinking here right now, and the policy signals we might hear later on today?
Okay. I also don't expect BOJ to change policy this time. And also probably outlook report is broadly unchanged. But, I agree that BOJ has limited incentive to send dovish signal. So BOJ might need to send a little bit hawkish signal that an additional rate hike is coming soon. So focus point is clearly actually governor's press conference. And BOJ may continue to signal that actually the rate hike is closely coming, and by saying that actually economic development is in line with their expectation. So in line is their expectation is a signal that actually they are ready for delivering additional rate hike. And in terms of risk assessment, actually BOJ may actually maintain their assessment of the global environment is still uncertain. Actually, that can justify actually BOJ not to deliver rate hike at this meeting. But it might be difficult for BOJ to keep arguing that pressure from the currency market is receding. So I think this is kind of the signal that BOJ actually is ready for additional rate hike in the upcoming meeting, not for this time.
Okay, so just to clarify, Ayako, David here, you expect the BOJ to move at the next meeting, just to clarify your view there.
Yeah, I expect December is most likely meeting for BOJ to deliver additional rate hike.
Okay, understood. Now, the inflation picture, and I think one of the things that you've highlighted here in your notes, I think is very interesting, is that we've started to see Japanese corporates start to pass on the inflation that they're feeling on their end. And I'm wondering, given elections, has inflation become now a social and political issue in Japan?
Yes, actually. Yes, certainly. Actually, one of the reasons why LDP lost actually quite significant number of seats is actually people's dissatisfaction of inflation and persistent currency weakness. So I think actually, even politically, actually, the politician might need to respond to these things eventually.
Yeah. Do you think then, given just how weak the yen is, does the inflationary pressures that it could actually create? Is there a risk now that Japan could actually see that inflation overshoot past 2%?
I think it's not immediate risk actually because this is still in the process that actually firms are changing their price setting behavior. So it's a kind of process that firms is trying to pass on the rising wage costs to consumers. But certainly, actually, in years of time, I see actually a little bit of risk of higher inflation or inflation overshooting if actually firms becomes actually confident to pass on actually wage cost. And wage momentum is clearly rising. And because of after this election, actually, because of this election result, I think the pressure is actually even intensified going forward.
Okay, and what specific categories do you think inflation might be starting to move outside the comfort zone of the BOJ as we look ahead to 2025?
I think clearly actually the service inflation is one area that the BOJ is focusing on. But October Tokyo CPI also signaled a quite significant actually pressure on the dining out, actually the restaurant cost, all those things. This is also a reflection of actually wage pass through to inflation. So I think actually those categories is an area that we have to focus on.
How do you think the BOJ is looking at the situation outside of Japan, the U.S., for example? Is it likely that Ueda-san is going to have to get a little bit more clarity on whether the U.S. has in fact reached some soft landing scenario, or the rates outlook there first before actually continuing on with this rate normalization?
I think, of course, there are some still actually remaining uncertainty about the actual U.S. economy, but data so far from the U.S. side remains solid. So I think actually once the election result comes out and the market digests all this election result from U.S., then actually BOJ may be ready to actually deliver additional rate hike. But of course, anyway, actually, the BOJ's pace of normalization, even after actually I expect the December hike, but after December is likely to be slow. So it's of course, BOJ will continue to monitor actually but the market will react to actually eventual election result from U.S. side.
Can I also ask you about, you mentioned the services inflation, we've talked about the weak currency, and I'm wondering how much boost to growth you're getting in the Japanese economy from all the tourism activity that's coming through this year, for example. How much of a boost is that to growth?
I think actually tourism itself has a very strong inflationary the implication, but actually from domestic GDP side, actually the tourism is quite relatively limited. It's just 1.5% of GDP. But from fourth quarter of this year, I expect the real wages is really turning consistently turning to positive. So from domestic front, actually we start seeing signal of domestic consumption recovery, although the actual pace has been very slow so far. But with this actually real wages turning to positive, and eventually actually fiscal policy is likely to get more actually expansionary because of the election result. This will certainly boost the economy going forward.
Ayako, it's great to have you. Ayako Fujita there, Chief Japan Economist at JPMorgan Securities. And you can also turn to your Bloomberg for more on this. T-Live Go is up and running to get commentary analysis from our expert editors on the BOJ today. And yeah, the bottom of your screen, we want to hear from you. Scan that QR code for our short online survey. You can tell us right now what you'd like to see more on BTV and any other suggestions for improvement. We'll take it. Plenty more ahead. All right, we're seeing a bit more momentum when it comes to the Hang Seng here this morning. We're up about 0.75%. HS Tech seems to be driving that here as well. We're up 1%, and we talk about, there's been so much going on when it comes to the earnings side of things. There's a lot of movement that we got to break down in the next few seconds or so. Let's talk about that and what we've been tracking so far. China's biggest state-owned banks delivering profit gains in the third quarter, defying a slowdown in the Chinese economy. ICBC and 4 of its smaller rivals posted increases. Lenders also reported a surge in so-called other operating income without elaborating. China's banking industry has been battling record low margins and rising bad debt as it works to backstop a sluggish economy. Eli Lilly shares tumbled after it cut the top of its full-year sales guidance by $600 million, following lackluster sales of its weight loss and diabetes drugs. Quarterly revenue for the Zepbound Mounjaro franchise missed estimates for the first time, raising questions about the demand for the shots. The drug maker blames a shortfall on inventory issues. BHP has been forced to walk back comments about having, quote, moved on from its failed Anglo-American bid to avoid running afoul of UK takeover rules. Chairman Ken McKenzie made the comments at the company's shareholder meeting in Australia, sending Anglo shares tumbling. BHP says that his comments were not intended as an official statement. Supermicro plunged the most in 6 years after Ernst & Young resigned as its auditor over concerns about governance and transparency. Supermicro says it disagrees with the decision and is looking for another auditor. Last month, the U.S. Justice Department said it was investigating an ex-employee's claims that the server maker violated accounting rules.
Yeah, that's really bad when your
auditor
leaves you. One of the last things you want to leave. I mean, yeah. Anyway, okay. So we're almost leaving, and just to maybe just bridge that, almost leaving earnings season behind us as far as China goes. So onshore today is the last day for reporting results. Now, just to differentiate that, we have a couple of more weeks before the rest of Chinese corporates report. So MSCI China is about 90% through, and we get into the very big ones around mid-November, where you have Tencent, Alibaba, JD.com, Meituan, PDD all report the latter part, the back half of November, and that's going to be very key, of course, to really have a better sense of what this earnings season's been like, because so far it's been largely soft and negative.
Yeah, and so where are we seeing at least more of that downside, or at least what's driving that, right? These negative surprises. If you take a look at and break it down sector by sector, all but 2 are actually where we saw negative surprises, right? So if beyond just the financials and consumer discretionary, most of these other sectors were basically seeing pretty big negative surprises. Real estate, no surprise there, was down some 60% in terms of how that sector fared compared to what people were estimating. So certainly still, the fundamental story hasn't quite changed yet.
Yeah, with that, I think Vanco was the one that reported the first 9 months of this year, nearly 18 billion renminbi loss. They're taking that story really as perhaps your best indicator for how the stock market moves moving forward, and whether or not we can see a turnaround in the housing market. Let's pivot now and have a look at the Hong Kong Exchange, of course, and of course this big pivot to the Middle East, opening an office in Riyadh, talking about that, exploring cross-listing and ETS with the Saudi exchange. In fact, we had a conversation with the CEO, Bonnie Chan, who told us that they are hopeful about a more fruitful collaboration with Saudi markets. Have a look.
we're very excited. So this morning we announced that we are going to open an office here in Riyadh. I think this is another step and furtherance of our overall strategy in the Middle Eastern region. And we have been having dialogues with our friends here for quite some time now. Of course, it started a couple of years ago. We have signed an MOU with the Tadawul Group. We've also recognized a few exchanges in the region, including Tadawul, Abu Dhabi, as well as Dubai financial markets, so that it will be easier for companies in this region to potentially explore a secondary listing in Hong Kong. But I will say that the kind of cooperation we have and the level of interest we've seen is just amazing.
Speaking of listings, I know there were 2 listings that are going on this week as well. ETFs are being launched on the Tadawul Index, tracking the Hong Kong Stock Exchange.
Correct.
Last year, the reverse happened.
Yes.
Let me just ask you about these new listings and how much you expect that it's going to mobilize capital into Hong Kong stock markets.
I think these listings are very important. First of all, mobilizing the capital. But more importantly, I think they're important in terms of building the awareness and familiarity. Because at the end of the day, we're at the beginning of this journey, right? Yeah. So we need investors on both sides to gain more knowledge and familiarity with investment opportunities in the opposite direction. And therefore, last year in November, when we listed the first Saudi ETF on the Hong Kong Stock Exchange, that marks the beginning. And there were over 50 Saudi companies underlying that ETF, which were listed on the exchange. And this week, it's the reciprocation.
Exactly.
We have those 2 ETFs with Saudi underlying, with Hong Kong underlying, listed here on Tadawul. And I think that's another step, towards hopefully, a very fruitful collaboration.
Quick question about also just the general activity that you're seeing on the exchange right now, because it feels as though there has been a small pickup in IPOs recently. I know the past month, September, has been a busy month in terms of volumes. Is that momentum going to continue?
Oh, yes, absolutely. We are very happy with the return of mega IPO, shall we say. We all know that the last 2 years have not been particularly conducive to the IPO activities, and this is a global phenomenon. Mm-hmm. But in Hong Kong, we first of all did a very big IPO in September for Midea, and it's a $4.6 billion IPO, which is the biggest on our exchange since February 2021, and the second largest in the world this year. And following that, we have already seen another couple of pretty big deals. And the important thing is the participation has been quite phenomenal.
Bonnie Chan there, Hong Kong Exchange CEO, speaking with Bloomberg's Jumana Berceschi in Riyadh. We're taking a look when it comes to Denso shares and also Toyota. What we're hearing is Toyota Industries is going to be selling all of its Denso shareholdings. So this is what Denso did before we went into that lunch break, and obviously was benefiting from that announcement of that buyback of up to $3 billion. The earnings were a bit disappointing, though, but I guess people were really focused on that buyback. But yes, Toyota Industries to sell all its Denso shareholdings. That's what we're learning from the company here. Undecided on the method of that share sale, but they will be selling those shares through March of 2027, 185 million.
Wow.
In terms of the amount there. So, yeah, they've been kind of partners with them for some time. I think they're just kind of, I guess, maybe taking profits from these stakes in Denso.
Yeah, quite a big development there. Scary, think about it. Speaking of, why Halloween costumes coming up next year are likely, potentially, becoming a sensitive topic in China. The details in that story just ahead.
All right, I thought we were going to talk about Halloween costumes but then the BOJ came through. All right,
spooking
we're
markets
seeing right now. Not quite unchanged here when it comes to policy. They are, though, in terms of the statement. What I'm reading from it so far is a little bit more hawkish, right? So they're talking a little bit more risk to prices skewed to the upside for fiscal 2025. Uncertainties remain high, though, for the economy and prices. So that's why you're seeing a bit of a turnaround in dollar yen strengthening on some of these comments. Dave, what else do you see?
Yeah, well, some of the core inflation forecasts have been, so this is specifically for fiscal year 2024 core CPI, excluding energy. So lots of caveats there. They've raised that from 1.9% to 2%. So there's a little bit of a bump up there. On your screens, of course, slightly lower on dollar yen. So to Yvonne's point, maybe there's a slightly more hawkish tone here than markets had been pricing in going into what was supposed to be, and maybe still is, a nothing burger. But we'll see. I mean, Sherry Yvonne, our Asia Trade co-anchor, can give us more context right now. She covers this more closely, of course, and she's outside, of course, the BOJ. Sherry, what stands out to you so far?
Yeah, the upside risks to inflation, as you guys talked about, stands out because, of course, we were watching to see what the wording around inflation would be. Remember, the Japanese yen now at a 3-month low against the U.S. dollar, and that's really pushing up cost prices here in Japan, and that's leading to more inflationary pressure. So the BOJ now coming out and saying that they need to watch the impact of the market moves on the economy and inflation. Remember, when the BOJ stood pat also in September, they were really signaling to the financial market moves, to the forex market moves. At that time, they really acknowledged the impact that changes in the exchange rate could have for the inflation outlook in Japan. It seems that they're again emphasizing those moves. The BOJ is saying that the price trend, though, is in line with the goal in the second half of the period, and that they're paying attention also to the overseas economic picture, especially in the U.S. Of course, we do have the U.S. elections coming up, and we do have a couple of days after that the FOMC decision as well.
Right. I mean, yeah, you mentioned there need to pay due attention to the U.S. economy, financial markets. It's interesting that the price trend they're saying to be in line with the goal in the second half of the period. You know, are we likely to see more? I'm just wondering in terms of what we could hear from in the presser about this. Are they going to acknowledge more about this yen weakness and what it's really doing to inflation, Sherry?
When it came to the statement today, we weren't really not expecting much when it came to the benchmark rate, but we were really looking to the updated outlook when it came to inflation. So when you're talking about those upside risks to inflation, the BOJ now seeing the fiscal year 2025 core inflation at 1.9%. So that's a little bit of a downgrade when it comes to the 2025 number. 2026, though, they're expecting it to see at 1.9%, which is in line with their assessment back in July. Of course, we still have to consider the fact that the Japanese yen continues to weaken, especially with the political backdrop here in Japan, where we have no certainty about what some of the economic policies will be coming out of the Ishiba government, whether or not he is able to form a coalition. We do get an economic stimulus package that needs to be approved by the cabinet on November 14th. What that could mean for prices as well for the economic picture will be a big issue and question that Governor Ueda will be paying attention to. We'll be listening to his comments around the weakness of the Japanese yen, because remember, in the last rate decision in September, the yen was still at around 140 against the U.S. dollar. We're at the 153. We're headed for the worst month for the Japanese yen since 2016. And what that means also is that we've given up all of those gains that we saw since the July rate hike. So Governor Ueda will need to contend with those changes in financial markets, with the Japanese yen and the uncertainty coming from not only Japanese politics, but the U.S. as well. Strategy saying that a potential win by Donald Trump could be yen negative.
Yeah, I think Credit Agricole had a forecast yesterday, Sherry, of maybe 160 if that was the eventuality. As Sherry was pointing out, 2016, of course. Sherry Ann, by the way, thank you so much, out of Tokyo for us. 2016, the worst month for the yen since that point in time. That's when the BOJ, where Sherry is, took rates below zero. And that's perhaps some historical context there. And maybe the BOJ is ready to hike rates again, they say, if some of their projections come to fruition. Tia, live we go for our Bloomberg client. So we have the statement out. The next thing to watch here is the BOJ press briefing, which takes place in about 2-3 hours from now. In the meantime, the very quickly market check. Beijing Biostar at the trading day up 50% in Hong Kong today. It's a good first day at school. We're trading now at about 24 Hong Kong dollars a pop. And of course, we're all wrapping up earnings season almost and some of a look at some of the earnings reaction so far from some of these big Chinese corporates coming up on your screens very, very shortly. And apart from that, it's a really quiet day across these markets as we look ahead to U.S. elections next week. That's it from us here on the China Show. Bye-bye.